Folks, we are live from the corporate headquarters of the Contrarian Trader, live from New York. It is Thursday Night Stock Charts Live. Now, I'm trying to muster up some enthusiasm here, which I am quite enthusiastic, but it's difficult because which I didn't ask for, but my son decided, you know what? I'm going to get my father chicken tenders. There's so much carbohydrates in here. 2,300 milligrams of sodium. Holy Christ. Nutritional information. Oh my God. 35 milligrams. At least I got my protein. So I had this, and I'm trying to burn off a carb attack right now. So let's get started. What we're going to talk about tonight, folks, is it time to buy gold? We're going to be talking about what the hell happened today. I've been doing this since 1988, right after the crash, I guess 88, 89. And this is a rare day. You know, it's rare to wake up and you have S&P futures up 6, 7, and then you end up as big as we did today. It's just a binary event. And we're going to talk about the whys. Why did it happen? And is it sustainable? That's what's important. Is this sustainable? And if it's sustainable, how long will this rally last? So let's first begin, as you wait for people to populate in, with a little bit of humor and a potential trade. That sodium is killing me. So I found this on the Twitter, and I figured, you know what? Let's play this so that we could see that the powers that be that go on to CNBC, the almighty geniuses, the holier than thou, the milords of finance, and how they grace us with their verbal pearls of wisdom every single day. And you should be so lucky to hear what they have to say. Let's listen to what this fellow had to say this goes back to earlier in the year. Volume's up.
Putting money in right now include Upstart, that is one, Tesla, MGM, and AIG. Why those four? All of which you've bought within, well, basically this week, except Tesla, end of last month.
Yeah, so Upstart's up about 25% just in 4 days since we bought it. We bought it on about 4 days ago. So that's actually made a nice little move in the short term, probably a little extended right now, but longer term, that's a good looking name. Very powerful, very strong earnings. These stocks are.
What do they do? Really, I don't even know them. What do they do?
Excuse me?
What does Upstart do?
Well, I'm sorry.
What kind of company is it?
Yeah, I'm not. You're breaking up.
Oh,
That's
well,
awesome.
We've got an audio problem here, Mark. I'm sorry. I do know MGM, I do know Tesla, and I do know AIG, but a 25% move in a week is pretty good for the company Upstart. Thank you, Mark, for your time. We'll have you back soon. Appreciate it.
Okay. So you have to laugh. I mean, that is just, I want to share this out.
Now,
you have to laugh that these people are allowed to go on TV to pontificate, and to take a look at, this was, the Dow was at around 35,000 at the time. Upstart was at like 392 at the time. So that brings us back on Upstart right about here, just off the highs. So all the mighty have fallen, and I happen to like it now. We have a bullish reversal bar on the week. For you options traders, implied volatility is very, very high. So if you want to sell puts, I would go for that. Very, very likely. I'll be trading this as soon as tomorrow. taking a look at implied volatility. For those not familiar with what implied volatility is, it's just a measure of how expensive the options are historically going back over a 12-month moving period. And the current IV percentile is 57%. Any number above 50, we consider expensive. I like this trade. I like the bullish reversal bar on the week. You can even buy the common stock. I would wait until the end of business tomorrow. Make sure we close near the highs of the week. Then look to get long of UPST at or around, where do we close today? $14.02, well off of the esteemed, I don't even know this guy's name. I really don't care. The high back then was around 392 when he got involved, and you get a little bit of a discount. All right, so we have some people filtering in here. Let's go to comments, and we will. Franklin, evening, Bob and crew. What a day! Can we order a few more of these? Yeah, we're probably going to have not a few more of this rate of change, but more upside. I think so. I think you could scalp to the short side going into tomorrow morning, especially if they gap it up. You probably get a filling of the gap. Hey, Bob, got crushed on a put on WHR. Hey, Kat, I still think that there is inflation. There is. We're going to talk about that in a moment. Only if you're naked and live in a cave can you avoid it. Happy I bought some maple leaves earlier this week. Smart move. WHR. Oh, that's Workhorse, right? WHR. Oh, Whirlpool. Wow. What a move, huh? Yeah, I think the key here is that we had this would have been our fourth consecutive week of really not closing at new lower lows. So they were building a base here. So yeah, I'm sure. Hey, listen, Kat, I had to stop out of a short today. I stuck around till I actually had a profit on this trade, post earnings of like $300. I got cocky and I could have booked that profit. I didn't, and the shares just blew up. So I had to book that loss today. We're offset vastly because of our gold mining positions and silver positions and gold positions, but that hurt too. Sometimes you get caught short, and a lot of people did. There was a lot of roadkill out there today. So let's get to it. Let's talk about what happened. Let me just first say hello to people. Finish that off. Donnie, yes, no doubt about it, pal. Bitcoin took out its June lows, but I think it's going to bounce back. I mean, because that one exchange went down. I don't know. Yeah, look at the reversal bar today. I think this is an opportunity. I've been dollar cost averaging into Bitcoin, and I didn't even think about lightening it up at all. I'm just going to continue to build, especially with the CBDCs coming down the road. A lot of it was, yeah. We're gonna talk about an article I have about how you had a lot of people caught short, and they had to cover in the derivatives market those positions. I was one of them. At least on one trade. Yeah. Evening, Lewis. Hello, sir. Talon. Hello, brother. Yoga back. Inverse claimer is hilarious. Yes. Tom Lou. LABU, really nice move today. I don't know the other ones. We can go over. You know what? Let me make a note now. Okay, You're in the books. Trader Isaac. You're seeing a lot of volatility on Boyle. For those folks not familiar with what Boyle is a leveraged ETF, putting you long of natural gas. Very, very volatile. We're seeing moves 11% one day, down 10% the next day. I don't even know what it was up today. I know it was up, but we're long of it. We're underwater on it, but it was up today. So it looks as though if you're getting a lot of volatility backing and filling, and you're not breaking down to new lower lows, you're probably testing a bottom. So we'll see how it plays out. We'll take a look at the weekly chart, how we're poised to close out the week in a moment. Added a firm. They reported last night, no? Or was it tonight they reported? UPST sold off. What did they report this evening? I bought Boyle 32, sold 42. I bought it. I averaged cost down, and I sold calls going out to, I think, December the 16th. I think the 16th. Good premiums got on those calls. Pete, hello. Come on, Bob. You really don't know Mark? Yeah, I know Mark Minervini. I haven't heard the name in a long time. Oh, that's Mark Minervini? That guy there? I don't know his face. I know the name. LABU, XLE, that did a reversal bar today. Yeah, we'll go over LABU. Good move today. I'm liking LABU. Last night, I'll tell you, I'm an opportunist. Last night I was like an LABD, which is the inverse. Now tonight I'm back in love with LABU. But we're traders. That's what we do. We're opportunists. Young Matt, what does it mean when they factor in next month's BPS rate basis point? When they factor in next, it's already factored in. I'll show you a chart in a moment. It's factored in. This year is done. We start thinking 2023. I'll show you a chart in a moment. Evening Talon Lewis, always a gentleman. Please check SPY and Meta. Spiders will be going over. We'll add Meta. Okay. See. Tim, we got you. Yeah, Yoga Mac, just close the books on 2022. It's done. Unless some report comes out that just blows our minds about inflation. We have one jobs report left in the year. I believe only one jobs report. So, after that jobs report, after the Fed meeting in December, the market's going to rip. It's going to take off. The stars are in alignment. So let's get to it. Let's talk about what happened today. And it all has to do with the consumer is dying. The middle class is dying. And the stock market cheered them on. They're cheering it on. So the reality of what happened today was really overblown. It was overblown by CTA buying. That's the commodity futures traders out there. And they were short covering, which is what I alluded to with Cat. A lot of money went into the market today to get neutral or to get hedged to the long side. So year over year, inflation still came in 7.7%. That's no joke. For context, remember, Paul Volcker killed inflation by getting the Fed's funds rate in 1981 above the rate of inflation. And this is a manipulated number. Double it, that's the real number, because remember, the number they use now is entirely different. The calculation for CPI today is entirely different than what it was in 1981. You got to double this number. So CPI 12-month year-over-year change, yeah, we backed off. It was 8.2. It came in less worse than was expected by 2 bips. Give me a break. Give me a break. hardly worth what we saw on the SPOOs today, with the S&Ps now up on the week nearly 5%, and on the day over not over at 5.5%. This rarely happens, folks. This rarely happens. It takes a lot of motivation, and that motivation is what you call a short squeeze, a lot of it. I'm not saying there weren't institutional buyers. There were. I was one of them. We had a short strangle on a ratio short, excuse me, a ratio strangle on Amazon with a bias to the short side. First minutes of trade, I went neutral on it. I went in and I sold puts on Amazon right at the open, which I try not to do, but I knew the headlines were going to be a rip-roaring day. This was going to be a one-sided trade day, no downticks. It's exactly what happened. We went into the day with a little bit of a short position off the table right away because the writing was on the wall. To have ignored it was to have sealed your own fate. So we took shorts off the table today. And do I think it's warranted? I'm going to go to in a little while why the CPI number does not make today's move warranted on a fundamental and price to earnings basis. What really caused today's price action? It's two things. One, real average hourly earnings, negative, worse than what was expected. So this is why I said before that the middle class is being decimated. Raging inflation, and in real terms, wages are declining. So the discretionary names, I think that we need to watch, see how the discretionary names did today. What is that? XL. Already have it up here. XLY. Now on the week, I want you to pay attention to this, because yesterday, this was the only sector that I know of. It could be other ones out there, but that I know of, and I pretty much go over a lot of sectors every night on Market Wrap, that took out the lows of not just October, but of June as well. That is the discretionary names. So normally our canary in the coal mine for equities is the Dow transportation stocks, because they generally lead the market either up or down, and then the market follows suit. And it's no different here. The transports first led up higher, and then the markets turned around a couple of weeks later, but the transports usually get it right. Now, what I'm going to be watching from this point forward are the discretionaries. Why do they matter? Well, they matter because if real earnings are declining, then somebody's got to be suffering. And who might that be? It's got to be your discretionary names. If people have less discretionary dollars, well, then it's got to come out of the discretionary names. Today was not one of those days. You saw a lot of short covering, and you saw some, the volume was good here. Not great, but it was good. I don't think it's enough to warrant a nearly 7.33% move on the session. Volume was above average. It was a good day. So is this sustainable? Not with real earnings going like this, going down, going negative. I don't think. So I'm going to be watching not the staples, but discretionary names moving forward to give me a clue as to where, along with transports, the markets might be heading. Right here, right now, in all probability, we have an undercut double bottom, meaning we took out the lows of October, and we're probably going to test the 148.32 mark. If the discretionary names break out, yields move lower, the entire stock market is going up. No doubt about it. That's what's going to happen, unless, of course, you have a geopolitical event, meaning Ukraine blows up, something horrific. Other than that, equities are going up higher. Some more so than others. We're going to talk about gold, silver, the mining stocks, emerging markets. Stick around. We're going to be going all the weekly charts today. In particular, a focus on gold and silver relative to the S&P 500 monthly time frame. You're going to love it. If you're a chart wonk like me, which I know most of you are if you're here, especially you, Kat. I know you're out there. All right, so getting back. So here we go. Here's the report. And inflation, huge miss. I don't call 2 bips a huge miss. I don't agree with this headline. Core CPI slides from 40-year high. Okay, that I agree with. Real wages tumble for 19 straight months. That's what got the market going. It wasn't a huge miss. It was 2 bips. Give me a break. Month over month, did it come in? Year over year, did it come in? Sure. It's still hot inflation. It's not 2% by any stretch of the imagination. Moving on. The headline CPI print, far cooler than expected. This is not far cooler. I don't like the narrative here. I love Zero Hedge. I don't like the way this is written. Not that they write it. They're an aggregator. But the writer of this column, did they give his name? Usually it's Tyler Dundon. I don't know who wrote this. Who wrote? Oh, Bloomberg. Oh, they got the source for the charts, Bloomberg. Who wrote this? Somebody didn't take credit here for their work. Maybe it is off of Bloomberg. I'm seeing Bloomberg sourced here, and I would believe that they wrote this because this is a red herring. There was no huge miss. There was no far cooler. That's BS. What they do is they want to get these headlines out there because they know the algorithms scrape the headlines first, and then they just take the market up. And it was like that. Nobody had a chance. No human being could respond quick enough to those algorithms without getting their face ripped off. Okay, so let's keep in mind, when we're looking at hyperbolic terminology like this, far cooler than expected. What was expected was a 7.9 read. The actual was 7.7. Does that really qualify as far cooler? I don't think so. So moving on. Core CPI rose for the 29th straight month. That's a trend. That's a trend. That's a solid trend, and it's still going up. But inched back off of 40-year highs on a year-over-year basis. Inflation just doesn't generally just go straight shot up higher. It has to date. It's due for a pause. Energies come in, foods come in. The used car prices, I've warned about this. Used car prices were a bubble a couple of months ago. That bubble was about to prick. It's been pricked. Used car prices are rolling over. And that was a huge part of why you saw the decline in CPI at the core. Year-over-year basis, rising just, I love this. This has got to be Bloomberg. Rising just 6.3% versus 6.5% expected. I mean, take it from where you get your source. I mean, it's Bloomberg. Services CPI is now at its highest since 1982. Well, why don't they? Why aren't they hyperbolic here and say services CPI historic high, 40-year highs, biggest high since 1982? No, they downplayed this. The services. Remember, the U.S. economy is a services economy, and services being now at its highest since 1982, rising faster than goods. Notice how they didn't boldface that or boldface that. They did not. Let's do that. Let's do this. We're going to do this. All right. We're going to put that in red. We're going to do our jobs for Bloomberg. Here. Rent inflation, 6.92%, highest on record. Note where they put it, near the bottom. Shelter inflation, 7.52%, highest on record, folks, highest on record. So, is this sustainable? Now with inflation at record highs. So I think that we're in a honeymoon period here. I think that what cannot be ignored is this, and I think that this is what Yoga Mac was referring to earlier. Yoga Mac, correct me if I'm wrong. This is what really got the markets rallying today. So going into the day, there was a very strong probability that we would get 50 basis points of a hike. I'm trying to read into this appropriately. And now there's no way that it's 75 basis points. And for February, they're pricing in only a 50 basis point, only a 33% basis odds of a basis point move in February. So what this is telling you is that the economy is damaged goods. The inflation is still rising. I think that the market is being a little bit too optimistic here about the uh, the plans of the Federal Reserve. Inflation is still on a tear. Don't get caught up with the hyperbolic narrative that's coming out of Wall Street right now, because what they're setting up for is for the final Fed meeting. They're setting up for the final jobs report. Earnings are, for the most part, done. So forget about that. And they're setting the stage for a big Santa Claus rally. The question is, again, is it sustainable? I don't think so. Market explosion sends CTAs, that's commodity traders, into short covering frenzy. So these are derivative traders going out there and covering bets today. And that was at around $79 billion. That's a lot of money to goose this market up higher. So understand that this wasn't just a market that was drilled higher by retail buyers and by institutional buyers. A lot of it was short covering, right? They had to get out. They saw the handwriting on the wall. You had to be a fool not to be able to see this. And if you're still short the market, that's not a good thing right now. You got to really, you could scalp shorts, sure, but I wouldn't be short for any length of time here. There's not enough news events out there to spook the market right now. Now, the other thing that favors the market is seasonality. Now, we don't want to use only 3 years. We want to go back. This is good. 12 years, November, up 85% of the time. One of the best months, depending on how many years you use, one of the best months for owning equities. And December is 75% up. So we can't ignore the seasonality that comes with this time of year. We have to respect it, which is why I had to suffer a loss today. I had to take a loss. We had plenty of longs to offset the loss, but we had to accept the loss. The handwriting was on the wall. If you chose not to acknowledge it, then you're going to get run over. So the other thing that the market has going for it moving forward is that this week, this is the Fed's balance sheet. This is the first week in several since the reporting week of the 12th of October, where you saw the Fed's balance sheet get goosed. So they had taken it to a low of $8,676 billion. Now, it only went up fractionally, not that much, but it's better than going down. Are stocks cheap? No. They're not. With today's rally, let's refresh this. Let's make sure that this is refreshed. And it is. So here's the rub. The rub is this, is that even with today's rally, stocks are back to nearly a 30 handle on Shiller PE ratio, folks. They're not cheap. Why are they not cheap? Because earnings are not good on a current looking basis and on a forward looking basis. So keep this in mind, that when the Federal Reserve is out there and they're looking at inflation, you don't think they've been looking at the stock market as a bubble? They have been. That's why they stepped back. They took away the power put. One of the reasons, besides retail inflation. So retail inflation is still surging. Stocks are very, very expensive. So I think that as we go into the new year and more data comes out, new earnings for Q4, I think that we're probably going to roll over, because remember, what we haven't had here was the blow off top on the VIX. And also remember that, again, Fed's funds rate is only at a range of 3.7% to 4%. Volcker had to take Fed's funds rate above the rate of inflation back in 1981 to kill it. We are only, remember, today's year-over-year inflation was 7.7% year-over-year. I mean, that's nearly double where we are on the Fed's funds rate. Could you imagine if the Federal Reserve had to double the Fed's funds rate where equity markets would be right now? It would be a disaster area. So let's just keep everything into context. Today was a great day. I'm not shocked that it happened. Bond yields were extended. Bonds were a bloodbath. It warranted a rally. We got the rally. Seasonality's in effect. The stock market was dealt the best economic hand it possibly could have been handed today, but it wasn't perfect. Wage reduction, the loss of wages, that is what really goosed the market a lot. Q1, yeah, Tom, I'm with you. Yeah. UMISH sentiment survey, yes, that'll come out tomorrow. I don't think it's going to matter much. Bad news is good news. All right, let's take a look at gold. How much time do we have? 6:33. I'm going to blow through this. Okay, so I've been coming on here for a while now, and I've been saying I am longer term bullish gold. Shorter term, I've been bearish on gold because the price action has just not been wonderful. We called the top on the US dollar. We knew it was probably going to stop going up when we saw the euro break out and the dollar stopped going up. At least the RSI on weekly euro broke out. Then ultimately price followed through. Now the yen surged up higher and the dollar is a basket case. This is the all clear for gold and silver. And I bought at the depths of the sell-off on gold, I bought more physical. So if you're going to buy gold and silver, like Kat was talking earlier about buying maple leaves, I wouldn't buy. I like buying the bullion, the ounce, but take possession. Don't buy the electronic. Take possession of it, because if you buy the GLD, there's not enough gold backing the GLD. So if they had a call on the gold that they have out there, there's not enough gold in their vaults. They just can't do it. So it's like they're fractional reserving gold at the GLD. If you look at the Sprott ETF, I believe they have the silver and gold in their funds. They can deliver if they get a call. So word of caution. So US dollar broken in all probability is going to go lower. Will we get counter trend rallies? Will there be opportunities to leg into the gold trade if you're not already in it? Sure. Yeah. What else is going to help the dollar? The 10-year yield. I mean, the 10-year yield, if you go back to the chart of the 1970s into the 1980s, the price of gold and the yield went up higher together. What didn't join them? The dollar. The dollar went like this, yields went like this, and gold went like this. You don't need to have yields going down for gold to go up. Okay? They can go up in tandem. Focus on the dollar. The dollar is the Achilles heel of gold and silver. Now, this is the XAU. This is the gold and silver index. And I have this drawn up on a comparison versus the S&P 500. And you could see, this is a weekly view. You could see that gold and silver are outperforming the S&P 500. Look at this breakout in relative terms. The price of the XAU relative to the S&P 500. This is a weekly breakout. So do I want to buy the S&P 500 at nearly 30 on a PE multiple, or do I want to buy gold, silver, and the miners at far cheaper prices? Give me gold, silver, and the miners. I'll take those. Thank you very much. And I'll sell calls. When we take a look at gold relative to the S&P 500, monthly time frame now, you could see that gold is dramatically outperforming the S&P 500. It was lagging. It is now outperforming. 1 month does not make a trend, but it's a pretty strong pattern here. So again, reinforcing that we like gold, we like silver relative to the S&P 500. Not that we won't trade the S&P stocks. We will, and we're in them. Silver, monthly view. Again, we're doing a comparison, silver versus the S&P 500. It's a ratio chart. What's this ratio chart telling you? Silver outperforming the S&P 500 on a monthly time frame. We still have a half a month to go. A lot can happen here, but it's looking pretty good. Look at the rising Stokes gaining momentum. As for gold, monthly view, we have an outside reversal bar at current looking good. 1750 is resistance. We're currently above it. This is a massive move in 1 month. I'm telling you, folks, they keep killing the dollar and they keep dropping yields, and you have inflation, and according to Bloomberg, at a measly, at a mild, at a piddly 7.7% year over year. Give me gold. I'll take gold. That's real money. I'll take that. And especially when they come out with the central bank digital dollar, I'll take gold. So gold up very strong on the month. My mouse is wonky. That's Bitcoin. What's Bitcoin doing? Bitcoin bouncing back here, trying to recapture support. Let's go to gold mining stocks. Weekly chart, NUGT. We're long of GDXJ, NUGT. NUGT, we're up over 26.5% this week. Massive breakout on huge volume. Loving the setup here. Let's take a look at the indexes, and then I'm going to blow through these really quick. All right, so the 10-year yield, we remain in a bull flag setup. To be fair, the bull flag setup is not broken. So a fair warning, if you see a reversal bar and you see the 10-year yield break out and above this upper band of resistance on a weekly chart, forget about the S&P 500 and especially the Qs. They're going to take it on the chin. Looking at bonds, I was going to sell puts on bonds, but there was no premium there. It all dried up. Big reversal bar on bonds, money flowing into bonds. They were very oversold. This was an unsustainable downtrend. The tip market. So, I'm going to keep going back to that article, the hyperbolic nature of the article about downplaying year-over-year inflation, right? What did the tip market tell you today? The tip market told you, Houston, we have a problem. The tips are up nearly 1.75% on the week, and on the day, up 1.66%. So what for those not familiar with the tips are, Treasury inflation protected securities. You buy them for protection against inflation. Well, if inflation was killed today, according to that article I just read off, because it was just so disappointing, it slid so fast, then why are the Treasury inflation protected securities rallying? Why are buyers seeking protection? Why do they no longer believe the Federal Reserve is going to be fighting inflation. They're going into the trade with their eyes wide open. The dollar we went over. We're going to skip to the euro. We caught this early on, the breakout on the euro several weeks ago. And sure enough, it's resulted in a V-shaped recovery on the euro. The same holds true for the yen. We knew that it was extremely oversold, not just on a daily basis, on a weekly basis, but even on a monthly basis. We were in an unsustainable oversold condition with RSI. It was down below 20. Look at these Stokes. This is going to be a bloodbath for dollar long. For whoever's shorting the yen right now, as bad as the Japanese economy is, the chart is telling you right now, if we were to close out this month this strong, yeah, it better be out of those shorts. So the shorts are going to continue to cover their yen position and their euro position. What does that mean for the dollar? Goes down. The dollar was an overcrowded trade. So was short bonds. Now let's talk about the VIX. Ah, yeah, TF Hatter, man. Thank you, folks. About 30 people on. If I can get 30 likes, it would really help me out. Thank you very, very much, TF Hatter. Thank you for the reminder. All right, so VIX weekly chart. I got to tell you, the VIX, yeah, it was down today, but it didn't. As the markets trended up higher into the close, the VIX was like not validating the move higher on equities. So yeah, we're down on the week, but we held support. Daily view. Ugly chart. We had broken out outside reversal bar, but take note of this bottoming tail. This bottoming tail implies that we saw buying off the lows and you saw a rally into the close. So here was the open. So equities this way, VIX this way, but equities stayed bid all day long. But the VIX rallied back, pulled back, higher low, strong close. RSI, higher lows. So you're probably going to get a spike up in the VIX tomorrow. Dow Transports. I mentioned that the Dow Transports are our canary in the coal mine for equities. They started going up in September, whereas the S&P 500 really at the beginning of October caught a bid, and the Qs, honestly, they were getting ready to break to new lower lows. They were saved by this inflation report. And again, it wasn't a great report. Dow Jones Industrials. We broke out weekly time frame, one trading day left to go. But at current, we are above 33,500. Volume on the week is not even. Let's refresh this. Sometimes it takes a while to refresh. Now this is wrong. This is not accurate volume. Let's take a look at the DIA. This is the ETF of the Dow. Volume is about average. It's not great. It's not great. S&Ps, we have a higher low, possible undercut double bottom. I think that they could easily take the market up to easily 4,000, if not 4,100 within the next couple of weeks. I think that we're going up higher. Qs, weekly chart. No real breakout yet, but I think that they're going to light a fuse under the shorts' butts. If we get a close above 284.60, 284.60 marks the pivot point of this potential W formation? The banks I'm loving. I'm loving the banks. One of my favorite sectors. Volume could have been better, but the banks are looking rock solid. Here's your W formation. 35.78 is the pivot point. We closed at 35.58. This is a buy signal. We're right there on XLF. Technology, good week, up 8%. I'm going to blow through these. SMH, the semiconductor sector, closed at resistance, up nearly 12%. LEBU, we're long of this. We need to buy more. So far on the week, we have a recapture of support. We're going to watch tomorrow, see how we close out the week. If we close strong above resistance, we'll be buyers with more LEBU. I'll be sending out an alert to members. I'm loving the cup handle breakout formation on RSI. You got to be long. Oh, my mouse is driving me crazy. There we go. Staples, 2 point. Who cares about Staples? The other area I want to talk about, folks, forget about EDC. I want to talk about emerging markets. Let's just bring up the EEM. We are long of emerging markets. So if you're worried about the PE ratio on the S&Ps being back near 30 again, and you're looking for a value, well, the value is in emerging markets, because remember, when the dollar declines in value, emerging market debt is denominated in US dollars. So when the dollar goes this way, well, those countries, they're able to pay back their dollar denominated debt easier. It's like a tax cut. So it's like if you're a real estate investor and mortgage rates just dropped and you want to refinance your debt, or you're paying an adjustable rate mortgage, rates just dropped and you're repaying your debt at a cheaper rate. Same deal here. So emerging markets, I've been saying for a while now, watch the dollar. Not only must you be long of gold, the miners, but you need to be looking at emerging markets as well. I prefer not to have any China exposure. So we're long of an ETF. I always forget the name of it. We're investors in it. I rarely check. We check it on Market Wrap, but I don't look at it day in and day out. What the heck is it again? Sorry, folks. I don't want to leave people with a cliffhanger. If you want to buy this, this is an ETF. Here we go. EMXC, the iShares Emerging Markets ETF. Now, it was up nearly 3% on the day alone today. No China exposure. So I prefer this relative to the EEM or the EDC because that has China exposure, and I just don't like exposure to China. God damn it. Effing mouse. I have multiple monitors going on here. When I'm live, it gives me a hard time. Weekly chart. We're up 3 1/3% on this position here. EMXC, if you don't want China. And it's outperforming EEM with China exposure this week. All right, we went over gold. We could skip this. Oil. Oil is down on the week. This is bullish for equities. Let's go over Boyle. Oil. Well, Boyle, we have a position. This is nat gas. I don't like the weekly chart, but you got to remember one thing about natural gas. Let's bring up the UNG. A lot more data here. Let's, in fact, bring up my annotated charts. I'm long term very bullish on nat gas. So here's UNG, right? We broke out back here. We called this breakout back here. Wow. We broke out in earnest above the primary upper band of resistance, April of 2022. Rallied. Now what are we doing? We've pulled back. We're now retesting. So a lot of people are out there thinking that, oh, the rally, the bull market in natural gas is over. No, it's just beginning. This is a pullback and a retest. You're seeing the moving averages, 20 period rising. Let's go to a weekly chart. You know, the weekly chart is not looking good here. You're going to get backing and filling, but longer term, I'm liking the natural gas trade. One trading day left to go here, and you can see what was acting as the lower band of rising support is now acting as the rising upper band of resistance. So longer term, as we liked gold, we still like natural gas. We went over silver, went over everything else. Let's do some chart requests. We got a bunch to go over here. I'm going to blow through these. You. That was my typo. Folks, we're going to be using TrendSpider, automated technical analysis, 35% discount code below. Cheapest price on the web. My gift to you. All right. Unity Software. Weekly chart. It's looking good. You have a lot of resistance above, but I think that we're going to break out. Strong week, good volume, under accumulation. RSI, what's it doing? Putting in higher lows. What's it also doing? Putting in higher highs. These are the signals by the market that tell you, hey, get ready. You're going to get a rally here soon, and these Stokes are like a coiled spring, and they are now hooking up. Daily chart. All right, so the automated trend lines are picking off resistance above. I'm going to take them off. Actually, no, they're up here. This is my line. So I already went over this. We have resistance immediately above. I think that this is a buy, a close above 29 bucks a share. So Unity, bullish. LABU. We already went over LABU. I'm bullish on it. RSI, weekly time frame, cup with handle formation. Nothing not to like here. If you don't want to pay up after a big move, sell puts. That'll get you in there at a discount. If you're just joining in, go back a few minutes, and I went over LABU earlier. I'm going to continue with for the interest of time. HYG. Oh, this is a good one. HYG is a buy. They've stopped going down. This is a monthly chart. This is the automated trend line, folks. The algorithm is picking off support, and we are breaking out. There's your breakout, monthly time frame. down below a secondary downtrend line. We're going to rally up here to around 76. That's your primary resistance level. I think this could still be bought now. Weekly chart. Wow, good chart here. High yield debt appears to be ready to move up higher. Do we have for you options traders out there? I'm looking at an IV percentile on HYG at 55%. This is eligible for options writing if you want to generate cash flow. HYG. Another one would be JNK. This is not as good. Options aren't as expensive. Go with HYG as an options writer. Daily view. Big breakout here. One thing we may get is a filling of the gap on HYG. Let's create an alert. We want to fire this off earlier. 10-minute candlestick. Boom. Our alert is set. HYG, very bullish on, looking good here. Members, we may be selling premium naked puts on HYG as soon as tomorrow. APPS. Wow. Digital turbine. Massive volume, daily time frame. We'll go back to that. Weekly chart first. We want to do a top-down view. Keep in mind where this is the value. Again, 35% discount code. If you don't have this in your back pocket, you're missing an arrow in your quiver. This is a time saver. Automated trend lines off, throw them on. You close right at weekly resistance today. You have a VWAP immediately above in orange. I like the chart. It's all about the entry, though. Here's what I like. Down here, create an alert at around 1512. We'll keep some sensitivity on. Our alert's set. So I would watch for a retrace. That alert fires off. Then you get in. XLE. We didn't go over XLE. XLE broke down yesterday. The thing to remember on XLE is that on a daily chart, we were in a ascending wedge formation. That ascending wedge formation broke yesterday. Back to the weekly chart. We're still down on the week. We're off the lows of the week. Not my favorite sector. Remember that energy has been a leader. If you're going to have yields pull back, which it appears that they are at current, you want to be looking at your technology stocks, in particular semiconductor stocks. If yields continue to pull back, they will benefit from a pullback in yields far more than energy stocks. Remember what the market said to you today. The market said, vis-a-vis bonds being bought and yields dropping, the economy is not good. It's not good. So they're anticipating a slowdown. It's not going to be good for earnings. If stocks are expensive this quarter, wait until next quarter. So money's going to come out of energy now, profit taking going into the back half of the year. It may just stay flat, a little bit of rotation out of energy into tech stocks for a trade. Then Q1, probably sector rotation back into energy and out of technology. So I would avoid energy right now. We have a position. I'm not going to add to it. Let's see what it did, LNG. It was up today. This had a really nice weekly breakout setup, and it didn't follow through. So, oh well. What else do we want to look at? Meta. I think Meta's a buy here. They announced the layoffs, earnings in the rearview mirror. I think there's a trade to be had on Meta. You know, their investment in the metaverse may not look good right now, but who knows? You know, 5 years from now, 3 years from now, they're going to want everybody plugged into something and not driving. That's the way this world is going right now. So I think that longer term, it's viable. They just need to reorganize the operation. So Meta, I like it here. I like it here. I hate the company. I hate the politics of the company. I hate what it stands for. But as a trader, I gotta like it. So Meta weekly chart looking good. We broke out again. Automated trend lines, folks. We broke out on the week. One trading day left to go. Daily chart. Nice move up higher. We cleared this volume shelf. Let's memorialize it. There you go. 104. Let's call it 105. 105 is your base, your baseline. We need to stay above that mark. Let's bring this up a little bit. I think it's even a little bit higher than that. Yeah, 108. 108 is the baseline. We want to stay above that mark. So if you're looking to sell naked puts, good. I'd be fine with that. You want to get long? Good. That's fine. Chart looks good. Meta. Hey, Pat. How you doing, pal? We're going to leave it off of Pat's trades. Franklin, you have a good night, my friend. Thank you for being here as always. AGNC. Overbought daily chart relative to the third standard deviation Bollinger Band. The buy signal was back here. Again, automated trend lines, 35% discount code below. Yes, I'm plugging it. This is my only sponsor that I would accept. There's a reason. I believe in the product. This adds value. I pitch no other product than this and my own company. We broke out back here the week of October, actually October the 25th. This is a daily chart. Nice rally here. I think you need to wait for a pullback. Where might we be pulling back to? I think this VWAP makes sense at around $8.40, but that is rising. Let's take a look at a weekly chart. Weekly chart, again, automated trend lines. I've never looked at this chart in my life. I didn't draw these. The computer did. We broke out at current. We're above that resistance level on a weekly time frame. One trading day left to go. I would wait until the final minutes of trade. Make sure that somebody doesn't send down a huge sell order, 3:55 Eastern Standard Time on Friday afternoon, to close it back down below the support level, leaving you the bag holder. Wait to the final minutes of trade. If we close above this mark tomorrow, 3:55 Eastern Standard Time, AGNC looks like it's a buy. You're welcome, Kat. Thank you for being here. Donnie, take care, pal. Franklin, have a great night. We're going to leave it off with my old friend Pat, a man who needs no introduction, a man with so much energy. It hurts me when he sends pictures of what he does. And he's retired. Sorry for sharing that, Pat. I got to put you on the spot here. It's kind of ridiculous. You're way too active. You're putting me to shame. All right, so Boeing. I got to like aerospace. Sorry about this. Mouse will not do what I want it to do. You can't buy it here, though, Pat. Weekly chart, we're up and into resistance. I mean, if we close above resistance tomorrow, then sure, it could be bought. Right now, you're going to buy it right into resistance. If you're thinking about buying it, maybe you're already in it. Daily chart. Yeah, there's that weekly resistance level immediately above. This is a rip your face off rally, unsustainable. 1, 2. You're gonna get a pullback here. I would buy on any pullback though. It's looking good. Last one, AMD. for Pat. AMD daily chart looking bullish, but it is into the third standard deviation Bollinger Band. Weekly chart looking rock solid. If it closes like this tomorrow, bullish reversal bar, I think that it's a buy. It's going up higher. AMD all-star chart. I like it. Very, very bullish on AMD. So hold on a second, Pat. You sold calls on Boeing? I like that. I like that trade. That's a great, great trade. Awesome job. Folks, thank you for being here. I'm humbled. Smash the like button. Have a great night. Have an awesome weekend. Have a profitable trading day tomorrow. I'll talk to you soon. Be well.